Are you a swing trader or a day trader? Be it advanced or beginner, this video is for you. Grab a notebook and a pen because I'm going to share some secret professional traders will not tell you. Yeah. Welcome guys, welcome back to the channel. It's your boy Snipes. If you're new to this channel and you haven't subscribed to this channel, you are missing out a whole lot of important knowledge and information that will help you level up your skills in trading the market effectively and profitably. You understand? So make sure you click the subscribe button and turn on the notification bell right now so that whenever we post or drop the video, you instantly get notified. Okay, now let's dive into the chart. So now today we'll be talking about before you trade, you need to check these things before you trade. You understand? And these are like the secrets of trading, like the most important things that professional traders out there do not do not want to tell you. You understand? So now the first thing we'll talk about here is time frame. You understand? You know, when you open your charts, like this, you want to decide which time frame am I trading from. You understand? As a swing trader, as a day trader, you want to decide, okay, what time frame am I looking at first? Am I looking at from the lower time frame or from the higher time frame, or from the intermediate time frame, which is from the medium time frame? So where am I looking from the first time frame? Where am I looking at? Is it from? So that is the question. You understand? So for me, as a swing trader and as a day trader that I am, the secret is that you have to start from the higher time frame. You understand? Because I know in TradingView we only have from the 24 hours down to the 1 minute time frame. You understand? But I think from the weekly, you don't have to see all of those things on the TradingView. So that's why I don't even like using TradingView. I just like using the MT5 app. You understand? Because it gives me a proper structure of my time frame. You understand? Based on I'm a swing trader and I'm a day trader, so I usually go from the higher time frame mostly. You understand? To get my overall view. So now, what we talk about here is the time frame. So the secret is that from the beginning you open your charts, the first thing you ought to look at is the higher time frame, because the higher time frame drives the lower time frame. It's the higher time frame that will determine what the lower time frame will do. Like, you know, we have the monthly, which is the beginning of the time frame. That is the highest time frame I've ever seen since I've been trading. I've not seen any time frame like yearly time frame or 2 months time frame. I don't think that is in this place. Let me see if I can see something like that here. There's nothing like that, obviously. You see, we only had the monthly. That is the highest one. So for we're not going to start with the monthly. You understand? We're going to basically start with the weekly. So the weekly time frame now, because we are day traders and a swing trader, so we ought to look first from the weekly time frame. You understand? And that is where you get the overall trend. You understand? So this is now what you have to do, what you do now. Now, in this case of VIX75 index, we can see what the weekly chart looks like. You can see it now that the weekly chart has been on a strong downtrend and is still on the downtrend. And we can see that the price has been moving down for a very long time. And this is a support level that got broken on the weekly charts. You see this particular place now. This is a strong place where buyers find some equilibrium here. You can see buyers came and took price up, came to the same level, and also reacted and took price up before there was a breakout. And still there has not been a retest yet. So looking at this, marking this level on your weekly chart is very, very important, because you know, place like this on the weekly chart, levels like this on the weekly chart, when price approaches this level and respect this level, they tend to move for a very long time, you understand. So it's good we mark levels from the higher time frame. Then when we go to the lower time frame, we basically know what's going to happen in that particular level. So now, first thing I talk about is the time frame. So you ought to write that down. For those who are taking their notes, write that down. The first thing you look at is the time frame. And I said you go to the higher time frame. As a swing trader or a day trader, you start from the higher time frame, which is the weekly time frame. Even if you are trading day trade or you're trading swing trade, look first at the weekly time frame, because the weekly time frame will give you the overall direction of the market and the basic structure of what the market is doing. Is it ranging? Is it trending? Is it on a side trend? Is it choppy? You understand? You have to know all of these things through the weekly time frame. You understand? So the next thing we'll talk about here is the market structure. Now write that down. That is going to be the second thing, the market structure. Now the market structure is basically the behavior of the market. You understand? The market structure is the study of the market behavior. You understand? So when you study the market behavior, you said that is market structure. You understand? So now this particular zone I draw now is called structure. This whole thing that happened here is basically a structure. So now price broke out of it, means price has changed structure. The market was up, so now price broke out and break out of the structure. So now for us to know the market structure, you understand, we want to know what time frame to check the overall market structure. You understand? So as we get to see that the weekly time frame is currently on a downtrend and is on a high selling pressure. So next thing we want to do is we want to check the overall market structure. What time frame do we check the overall market structure? We have to go with the daily time frame now. Now the daily time frame will give us the overall structure of the market. You understand? So if you look at what the daily time frame is saying that this market has been on a downtrend. You can see it was creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And price came to create a higher high here and a higher low and a higher high. But unfortunately, the market has fall back. Why did the market fall back is basically because of this strong resistance level that is here. This is a key resistance level from the daily time frame. So this is what stopped market from creating a new higher high. You understand? From creating a new higher high to the upside, because basically the market would have been going up back to this major resistance level on the weekly, but the market failed to go beyond this level. The market failed to go beyond this level. I do like to use this horizontal line sometimes, but it's good you use it's good you use the square. It's good you use this for your key level, so that you basically know where mark the necessary place where you know price is going to react from. So this will give you a clearer view and a clearer understanding. You understand? So now we've known the time frame that we use to check the overall structure. So now I can freely tell you that okay, this market is currently on a downtrend. The market is currently on a downtrend. You can ask me, okay, why the price had to move all the way? Why the price don't keep making these lows and highs like this? Why the price had to break out of this little high here and came to break this one also and create a new high? It's sure this is a major resistance level. If price would have break above this level like this, it means this structure has changed. It means price has changed structure in this level, and you see price now started to buy to the upside. So you get to a key level again where it's basically rejects from or reverse from. You understand? So now, since price reacted from this level and respected this level, we ought to see markets dropping down. You understand? A massive drop, and this market is definitely going to drop. Basically, the way I'm seeing it, it's basically going to drop down. So this major support level right here, understand? Because I have drawn a level here, and I think price is going to break it. Because of what I am seeing in the market, I think price is definitely going to break it. You understand? But we do not know yet the price break it completely. You understand? Price have not closed below this level yet. You understand? So anything that is here is just fake out. You understand? So we need a close of candlestick below this level to confirm that this level has been broken. Then we can now decide to maybe trade the retest from after the market break and retest from here, or decide to look for where we can position our sell from. You understand? So now we go to the third one, which is the key major levels. Now I think I just briefly explained this one in the number 2 right here. So take that down. Number 3, the major key levels. Now this is it. This is our major key levels. You can see on the daily time frame. On the daily time frame, this is our major key level. Now let me quickly label this as our major key levels, so that you can easily see it and understand what I'm talking about in the chart. Now this is our major key level. This is our major key resistance level on the daily chart. So you can see it right here. Then this one will be our major key support level in the chart. So now this is how you do it. You label them so that it will become easier for you to understand and know what the market is doing whenever you open your chart. You understand? Whenever you close your chart and you come back to your chart, you easily know that, okay, this is my key level, this is my major key level. Now this is our major resistance level, and this is our major support level. You understand? So the ability for you to know this level, we enhance your potential also to be able to get good trades, get sniper trades, and become profitable in the market. You understand? In this case now, we can't use trend line in this case, although it's not every time you use trend line, because you know the market trend 30% of the time, and the remaining 70% is divided into 2. One is for ranging and one is for choppy. So the market will basically trend for 30% of the time, and the markets we basically do ranging pattern for 40% of the time. Then while the remaining 30% will be for choppy markets, which are those markets that we don't trade. We stay away from a choppy market. When you see a choppy market, you stay away from it. But if you see a trading market, you take advantage of it. If you see a ranging market also, you can also take advantage of it. So now in this case, this trend line has been broken. You can see this trend line has been broken, but this is a major resistance level, so it has not break out of this structure yet. So it means the market is still on a downtrend. This was only a upswing in a downtrend market. You understand? You know, market moves in swings. You understand? Once the market creates an impulsive move like this, it will create a retracement move, an impulsive move, a retracement move, an impulsive move, a retracement move, an impulsive move. Then definitely this retracement move came, and we also see that the market broke out of this trend line, and the end of the impulsive move ended at this resistance level, which is the key level. That's why I see price fall down. So now, knowing your key levels and your key trend lines, those are most importantly for you as a trader. So now we'll take this out. Let's just use it for this level. Now this is a key trend line. Now let me show you a key trend line now in this place, because you don't have to skip any of these things in the market while analyzing your trades. Now this is a key level. This is a key level in this place right now. You can see it very clearly now that where price approaches this level, some people now will be estimating that, oh, they're predicting the market that, oh, the market will reject from here and the market will buy back to the upside. You understand? But because you are looking from the weekly time frame, you are looking from the higher time, that's why I said it's basically important for you to look the higher time frame, which is from the weekly time frame. Now, when you look at from the weekly time frame, you definitely know that this market is on a strong downtrend, and you should be looking for sales, not buys. You understand? Until a change of structure has happened on the daily time frame, because for you to determine if a trend is up or down, you have to look from the weekly, the daily, from basically you can look from the monthly also, but it is not necessary look at the monthly, but it's very, very important and necessary you look from the weekly. So we look from the weekly, the daily, and the 4 hours to determine if the market is in a downtrend, or if it's in an uptrend, or if it's ranging, or if it's choppy. You understand? So from the weekly now, the weekly tells us that the market is currently on a downtrend, on a strong downtrend. So we ought to look for selling opportunities. You understand? And for we to look for selling opportunities, we need to mark our key levels, our major key level. You need to mark those effective key levels, like what we have done here. We mark our resistance level and our support level. So where do we look for sell opportunities? Are from your resistance level, because the market is in a downtrend. So now you mark your resistance level. Now this is what you do now, and you see price now broke out of this trend line right here, showing that yes, the market has now give us a more confluency. This is a trend, this is a zone level, this is a trend line that has been broken. So now this now gives us another confluence that yes, this market is definitely still going to go down. You understand? So now let us take this out, because it has been intersected already, so that trend line has been invalidated. Basically, we know it's going to be invalidated because of the way price was moving down. It was still on a downtrend. So fourthly, the fourth one is the weekly previous candle pattern, the weekly previous candlestick pattern. You know, now let's talk about the weekly previous candlestick pattern and the formation behind it, the psychology behind this formation. You understand? So now let's look at what the previous candle, the weekly time frame did here. Let me just take this out so we can just see it very clearly. Okay, now you can see what the candlestick the market formed here. The previous candle, you can see this is a strong shooting star rejection pin bar. You can see it. They have different names to call this pattern right here, this candlestick pattern. You can either call it a pin bar, or a shooting star, or a rejection pin bar. You understand? So these are the names we call this pattern. They are all the same names. You understand? So for me, I do love calling it shooting star or pin bar. You understand? So this is a shooting star right here, and with the small body and the long wick that is twice the body. You understand? So this little wick here does not really matter any much, because what we are looking at is the candlestick size body and the wick above it. You understand? So now this is a very strong shooting star candlestick pattern that the previous weekly ended with. So now this gives us a strong confirmation that yes, the previous week sellers dominate buyers, and they take charge of the market from buyers and to them. You understand? During the week, buyers opened the markets above and they took price up. And before the end of the week, sellers came in and took price down. They dominate the market from buyers, and they took the price down to close to the open of the candlestick. So you can see it, and this shows us that yes, the market has high momentum of selling pressure. You understand? So knowing the number one thing I said is I talked about the time frame, then the market structure, and I talk about the overall market structure. Yes, that is the same thing. And I talk about the support level, and now the previous candle of the weekly time frame. So now, if you can know all of these four things I just mentioned, now trust me, your whole trading approach will definitely change. You see that you predict the markets in the right direction, where people are going for sales, are going for buys, or let's say people are going for buys. You have to see from the weekly time frame, you know that this market is going to sell, because your vision is from the bigger picture. You understand? And you trust your system, you trust your analysis, you trust how you analyze the market. You understand? So now let's go to the next one, which is time frame alignment. You understand? For example, you want to trade the H1 time frame. You understand? What do we all know about time frame alignment? Because this is a very critical point here in as a price action trader and as a swing and day trader. Time frame alignment. This is what will make you be selective. Now you have to be looking for A plus setup. Now this is what will give you that what is it called? That roadmap to that A plus setup. Because without getting the time frame alignment, you find it difficult to get A plus setup. You find it that you always take the wrong trade. You always take trades that go against you, that hits your stop loss all the time, and you'll be like, why is market hunting my stop loss all the time? You know, one thing I've discovered about this market, the market always gives information based on what the previous pattern or the previous data he has made. That is like what he used to produce information of the present and from the future to the future. So the market is not like cheating you. It does not lie. It's not derived is not watching you somewhere. They are not looking at you trading. They don't even know how you trade. They don't even know your emotions. They don't even know the capital size you have. They don't know your account balance. You understand? They don't know any of all these things. They don't know even your strategy. They don't know anything about your way of trading. All they know is that, okay, they fix something they fix a system that can give you money, that can give you a lot of money and for your life and for lifetime. You understand? So I heard some trader will say, oh, they watch me, derives no say I won't enter this trade. Now why they take me out? Now why they see my stop loss? Now why they do me this one? Now why they blew my account? Derive don't watch you. Derive doesn't see your trade. They don't know anything about how you trade. You understand? So stop blaming the market. Stop blaming Derive. Stop blaming your broker, and just work on your entries. Work on your perfection of your market, on how you approach your trade, on how you look into trade. You understand? Work on your psychology. Work on your approach in the market. If you're a price action trader like me, work on learning price action every week. Do that every week and backtest every week. You understand? But with this, I am telling you now, it's going to be a roadmap for you to cut the whole journey short and get straight to the main points. You understand? So now let's quickly talk about this time frame alignment. You understand? So if, like I said, if you want to trade the 1 hour time frame, for example, you have to look first from the daily time frame. You understand? But I want to give you a cheat code right here. Even if you want to trade from the 1 hour time frame, it's basically good and very, very important for you to check the weekly time frame first. Now, first of all, I said if you want to trade the 1 hour chart, look from the daily chart first. But in a cheat code, this is a cheat code now that I'm giving you, that will give you that A plus setup regularly and consistently. You understand? Look first from the weekly time frame, because the weekly time frame will give you the overall definition of the trend. If the trend is up, or if it's down, or if it's ranging. You understand? Or if it's choppy, you will definitely know from the weekly. So now I want to trade the H1 charts now. This is what I need to do. I need to go check the weekly time frame first to get my overall view. Now I have gone to the weekly time frame and I see that the market is currently on the downtrend. So I have to look for selling opportunities. So now I'll now go back to the daily time frame and start my analysis now. Now, I did one thing on the weekly chart. What did I did on the weekly chart? I went there to check the overall trend and I saw that the market is in downtrend. Fine. I said, okay, now this is the only thing I want to check on the weekly time frame. Because why? Because I'm trading from the daily, from the H1 charts. So now I want to start my analysis from the daily time frame, which is where you basically start doing your analysis if you are trading from the 1 hour chart. So now in the daily chart now, let's run a quick analysis right here. In the daily chart now, we can see where the market was trending down, and we draw this trend line right here. We draw this trend line like this. Yes, we draw this trend line like this. Let me draw it very well. you draw this trend line like this in a very clean way, you understand, if you zoom out a bit, you will see that we can also draw a trend line like this. So we can also draw a trend line like this if you zoom out. But you see, the market is very, very far to get to this place. It's a very long distance. So for market to get to this place, it will take a lot of days, even up to weeks. You understand? It will take a week plus to get to that level. So now we have to look from the nearest trend line, which is this one now. So now let me take this one out. Let me take this one out. So now I have taken that one out now. So now this is the trend line we have to focus on now. I'm doing my analysis now from I want to trade the H1 chart. So this is how I'll do it now. This is how I basically trade. So I'm giving you a cheat code. These things I don't share it out, but I'm doing this as a favor to every trader out there, being you advanced, a beginner, and you're finding it difficult to be profitable. This is the secret now. This is the secret most professional traders do not tell you. This is what I'm sharing out to you right now. You understand? So now you can see we have the first swing, the second swing, the third swing, which gives us first touch, second touch, and we can trade this level. You see, that is how we see this market slow down. Then we had the fourth touch right here. So now price has broke out of this trend line, giving me the idea that buyers are in this market and they are pushing the market higher. Then the next thing I want to look after on the daily time frame is where is my key resistance or support. So where is my key levels to get a trend line? Now where is my key levels? Then I mark this first as a key level, right? So the next thing I want to ask myself is, as the market's change structure to bullish, or is it still bearish? So now that is the next question I want to ask myself, why I'm still in the daily chart. So now I'll ask myself that question now. Is the market bullish yet? Has it changed trend to bullish, or is still in a downtrend structure? Then I will look at it very well. I will see that this is the major high here from the daily time frame. I will say no, price hasn't break yet, so it's still on a downtrend. You understand? This might just be a upswing in a downtrend market. So I will say fine, this is my key levels, and if price should approach this level, I will know that okay, something is going to definitely happen here. Then next thing I got a trend line from this level. I got a trend line from this level also. I got a trend line from this level. That this now is telling me that okay, the market is trending, is moving bullish right now, but I'm looking for selling opportunity. You understand? I'm not looking for buying opportunity. I'm looking for selling opportunity because I have seen the overall trend from the weekly time frame. So now our next thing I want to do is that I've gotten, let's count how many confluences we've got here. First of all, we've got that the trend is in a downtrend 1. Second, we got our key resistance level 2. So now the next thing we want to do is go to the 4-hour chart. Now we're doing our analysis from the daily chart down to the H4 chart, which is where we are basically want to trade from. So now this is the weekly chart and the H4 chart now. So now in the H4 chart, we saw how, let me draw this very well. Let me draw this very well because you have to draw it very well so you get the real perfect drawing. Yes. So now, this is what price has been doing before it breaks out, and you'll be like, oh, market is now bullish, I'm going to buy this market, I'm going to buy. I know a lot of traders bought this market here and they eventually got stopped out. You understand? And they'll be asked, oh, why did the market take me out? Why did the market have to do me this thing? You understand? They'll be crying, they'll be ranting all the time. You understand? So now, based on you know that this market is in a downtrend, based on you look from the higher time, which is the weekly time for you, you don't panic. You know you're going for sales, right? So now, in the H4 chart now, this is what we want to check on. Now, we want to look for other confluences. Now, the question you ask yourself is, what is the H4 chart doing? Is it trending up? Is it trending down? Or is it in a key level? Or is it ranging? Or is it choppy? You understand? So now, we mark this level, this resistance level, as our major key level, right? So now we know if price gets to this level, something is going to happen. It's either a price is going to respect the level or it's going to break out of the level. That is two things, you understand? So now when price first approach this level right here, when price get to the level right here at first, we had this rejection that came down. You understand? The market formed a candlestick pattern here, which is an inside bar candlestick pattern, and the market fell down, showing that sellers are here. They are trying to push the market down. You understand? For market to do this at the first time the market hits this level, you understand? You know, there are some levels that when the market hits, the market will just break the level immediately it hits that level. You understand? So this one now, it respects this level. Now you can see as the market respects this level, fall down, the market has to go back again and fall down. But now you as a price on Twitter, you're not going to sell immediately the market gets to this level. Why? Because you are looking for sniper entries. You understand? You're not going to sell immediately. Why? Because the market is telling you that this 4 hours chart is still on a high, it's still on the uptrend, it's still on a bullish trend. This is just from the H4 chart. The H4 chart is still on a bullish trend. So now you want to wait for a change of trend or a change of character for you to decide that okay, this market is no longer on a bullish trend, and it will align with, it has aligned with the daily time frame. Because now from what I am seeing here, for let me just pinch this back a bit. Let's say for what the market just did here now, the H4 now has not aligned with the D1 yet. You understand? But this is when you will look for yourself. This is when the H4 time frame has not aligned with the D1 time frame. Now this is it. Let me show you. Now you do this. You mark your zone. You mark from the candlestick body, the opening candlestick or the closed candlestick body to the wick. This is how you do it. See how I draw it now. Now this way, now you get a full clear understanding of the market. Now this is where the market now align with the H4 time frame, now align with the D1 time frame. This is where price broke out. This candlestick you see here, this black candle, this is the breakout of this particular zone. This is a support zone and this is the resistance zone. So for price to break out of this level now, this shows that this level has been intercepted. You understand? This level has been intercepted to say okay, now you can also say that this level has been broken. Yeah, that is the regular one we know. This level has been broken here with this candlestick right here. Then we see that price came back to this place to do a retest, and that is how we see price fall to the downside. So now we see that this H4 now aligned with the D1 time frame because we had the major key level here, and we now also have another thing. This is a hanging man candlestick pattern. Shows that this pattern here is a reversal pattern when found in on the top of a uptrend. Now this is a resistance level and this is the top of an uptrend. So price, this candlestick formed there, this is called the hanging man. So now all of these things now contribute to our confluency, shows us that okay, the H4 time frame has now aligned because of this breakout right here. So now the next thing we want to do is to go to the H1 time frame to check if the H1 time frame will align with the H4 and the D1 time frame. Then we can now decide to take our trade. So now that breakout you saw was this whole move right here. This was the breakout. You can see this was the breakout. Oh, okay, no, it happened here. It happened around here, it happened around here. So this was the breakout. This was the retest. So now we want to catch this retest now. We want to catch it now. This is what you do. You now look for confluency. You also look for confluency. First, you want to ask yourself, what is the H1 time frame doing? And you can see when the H1 time frame break here, you can see that this market has changed structure and it's not trending bearish. You understand? It's now on a downtrend. So now you see price retesting back to this level. So this is what you do now to find a plus setup. To find a sniper entry. This is what you do. Now you see this is a swing that came down here. Then this is another swing that went up, then came down again. So this is a swing. So you draw a trend line to catch that sniper entry. You draw this. This is a first touch. This is a second touch, and this is a third touch. This is where you now look for your. This is where you now look for your sell form. This is where you now look for your sell entry form. Why? Because it is a third touch. You understand? This is where you look for your sell form. You understand? This is where you now look for your sell form. So You see this place right here. So this is where you look for your sell from. You can also take a sell from here because this align with this resistance level. You don't sell here because if you sell here, you get trapped because here is a support level. You understand? So you sell from the resistance side. You see, you get your sell here. If you get your sell here and take to here, you see it's a good one. You make profit. If you also sell here and you hold to this level, it's a profit. You understand? Then we also had another opportunity of sell, which is this support that broke and became resistance. You see, this is very, very, very profitable also. This is another one. You see, this support broke and become resistant. You know, we have three type of support and resistance. We have the broken support and resistance. We have the horizontal support and resistance. And we also have the dynamic support and resistance. You understand? So now this is how you know that, okay, this market has basically aligned with what I'm doing. You understand? So now let's move to the next one quickly. The next thing here we'll talk about is price change of character. Now, the example, now this is a price change of character. Let me go to the D1 time frame, for instance. This is a price change of character. Now, this is a price change of character. You see, the market break out of this place. This is a price change of character. Then let me also show you another price change of character again. For markets to break this trend line, this is a change of character. You understand? And when markets change character, it means that at that point the market is not really stable. You have to wait for confluence. You have to wait for new character to form. You understand? So now you go to the daily time frame where price broke out of this trend line. This is a change of character. You understand? For market to do this is a change of character. You understand? So if you can know a change of character when it happened, it will give you the ability to know that, okay, the market is no longer on this trend. The market is no longer on this pattern anymore. It has changed pattern. It has changed its own behavior. You understand? Then the next thing, which is the last one, is identifying sell zone and buy zone. You understand? Now, this is a sell zone. This zone right here where the retest happened, this is a sell zone. This is a sell zone. And this is a buy zone. This is a sell zone again. You understand? But if we were to be looking for buys, we'll be looking at buy zones. You understand? So this is a sell zone. This is a sell zone. You understand? This is also a sell zone, but we're not going to be looking at, no, this is not a sell zone. This is not a sell zone, sorry. This is just our major level, because at this level now, this market is, this is our key level where we'll be looking at the market's reaction. So that's not a sell zone, but this area is a sell zone because this is the 1 hour where we are taking our trades from. So this is a sell zone. Then this is also a sell zone. You understand? So we've come to the end of this video, guys. I believe this video helped you to get some understanding, and if you found value in this video, please share this video, like and comment and subscribe. Make sure you turn on the notification bell so that whenever I drop a new video, you will instantly get notified. You understand? Whenever a video is being dropped, and make sure you share it to your friends, guys. And Merry Christmas to you guys and Happy New Year in advance. You know, this is a month of December and Christmas period also. We had to celebrate with our family. We had to share love with our family. So you can share this video with your loved ones, people that you know that are traders like you that want to get into trading. Share this video with them to learn and understand how trading is, how to trade the market effectively. And I told you the other time that this is a secret professional trader does not want to tell you. So this video is a very, very educational one, and it's also very high value video. So make sure you save this video also, and you get to understand the video by watching it time to time. You understand? So thank you guys for watching, and see you in the next one. Peace out.